Welcome to TheoTrade. This is Don Kaufman. Here we are, March 16th, 2016. The FOMC speaks. What do they ultimately say? Does it matter? Well, what it comes down to is they're still planning on raising interest rates, but maybe not as soon as we had all thought. So again, some of the rhetoric out of the FOMC, neither here nor there. How do the markets react? I think a lot of people are probably going to look at the S&Ps right now and they're going to claim victory, right? S&Ps are up about 11. I mean, it was a very quiet trading day up until the point of the FOMC announcement. After the FOMC announcement, we traded up, we traded down, but time out. The talk of the trading town right now happens to be none other than the bond market. So what's really on the move over here is the bond markets. And I'm going to relate that in a moment back to the S&P 500 over here. But take a look at the bond markets, because you have to just recognize the sheer volume and mass it takes to move these markets is nothing less than phenomenal. But inside of the bond markets, again, right here I'm on Pacific time. That's 11 a.m. Pacific time, where the FOMC announcement comes out. We trade from 161 and 4 ticks all the way up to 162 and 7 ticks. So you pretty much got a 1-point move, then a 1-point move to the downside over here, then pretty much another 1-point move to the upside. Wild, okay? Remember, bonds, they're going to move markets. And if you think the bonds move big, well, guess what? The notes, they did even more than that. Now, typically what you see is the bonds move roughly double the notes. So the bonds being the ZB, the /ZB, that's a 30-year U.S. bond treasury futures. Here we're looking at the ZN. What's crazy about the ZN? It's a very different picture inside of the ZM. Now, this to me as a trader, a little bit more ominous. And again, people are going to focus on the fact the S&Ps are up 10 over here. You guys, if you've listened to any of these videos, you know what my positions happen to be, which I'll discuss here momentarily. But the ZN, it didn't have any question. It exploded to the upside and kept right on going over here. That, okay, much to my amazement, didn't put as much pressure forth to the financials as I thought it was going to. However, listen, the move just happened. The day is still rather early. Well, today's trading session may be over. Nevertheless, tomorrow is a whole nother day. If you look at the ZN, is this a breakout move right now to the upside? So the ZN has actually been fading heavily, okay, from this, the recent highs over the 130, 131 kind of handle, fades all the way back into the 128 handle, but explodes to the upside. Again, this is a very statistically significant move to the upside today. If there's going to be more upside inside of the 10-year, okay, very well going to put pressure forth to the S&Ps. This is why my focus first and foremost after an FOMC announcement, it's got to be what's going on inside of the bond market. And again, people hear about the steepening of the yield curve is getting flatter. Just know this, the world uses these ZNs, this 10-year, to hedge their risk. And the world goes there to hedge their risk. And 1.25 million contracts trade in there. Okay, it's a relatively heavy day. Not an extreme day, but a relatively heavy day. But this is the first true kind of uptick that we've seen inside of the 10-year, which then brings us over to the S&Ps. So now let's focus just for a moment on the S&Ps, because again, the whole market right now is about just that. It's about the market. All right, I know people are going to be like, it's Apple, and Apple might be breaking out to the upside. Yeah, maybe. It's Netflix. Come on, Don, what about Netflix? Okay, neither here nor there. We're in a market right now that's being driven by bonds, being driven by the S&P. Here, the ultimate question, and we're going to figure this out most likely in the next 48 hours of trading, okay, by Thursday, Friday. Here's the whole key. We're either at a blow-off top, okay, or we're going to start to rally even harder right now. And there is no in-between, okay? We are, again, trading to levels that we didn't think we'd see. And listen, I am a longer duration bear here. And I'm going to, again, reiterate why I'm a longer duration bear is look no further than, you can go to like a 5-year weekly, okay? A 5-year weekly, that'll do it for you. What's the upside potential versus the downside risk? And I can't say that enough. The upside potential, I don't know, let's get crazy. Let's talk about going to maybe 2,200. The downside potential, I don't know, 1,600 on the S&Ps. So I'm a longer duration bear. However, in the short duration, you better believe I'm going to be taking some pain here to the upside because that is a painful move to the upside. But I'm telling you, here we are, okay? This today really has some of the hallmarks of a little bit more of that kind of blow off top. However, at this point, and again, when I say it's a little bit of a blow off top over here, this is some of the intraday trade in the S&Ps. However, okay, you have to recognize the next move inside of the S&Ps is solely dependent upon what the bonds are going to do. Those bonds continue that rally, okay? The notes take off another 20 ticks tomorrow. Forget it. The S&Ps are going to get crushed down. And as the day progressed over here, even so here again is the FOMC announcement. We faded. We were up. We were down. Okay, we rallied. We faded, though, as the day progressed. We did not close anywhere near the day's highs. Okay, so we did fade as the day actually progressed. Some of the sectors even closed down, including the financials. Again, the next move inside of the S&Ps, all up to the bond market. Join me tonight for the coaching session. I'm going to be doing a coaching session tonight. Good trades gone bad. One of my favorite topics. That's going to be 7 p.m. Central Time, right in the Theo chat room. Thanks a lot, everybody. I'll be back on tomorrow and tonight for the coaching session. Have a good evening. Bye-bye.